Good morning, everybody. It's Tuesday, January 21st, 5:26 a.m. Central Time. Grain markets higher across the board this morning. March corn futures up 2.5 at 486 and 3/4. March soybeans up 16 and 3/4 at 1050 and 3/4. March Chicago wheat up 7 and 3/4 at 546 and a half. March Kansas City wheat up 6.5 at 555. March spring wheat up 5.25 at 588 and 3/4. Let's start off in South America, where they had some rains or lack thereof over the weekend.
So, weekend rains in Argentina and southern Brazil were disappointing. Some of Argentina's central soybean areas caught up to 1 inch of rain with larger amounts locally. Still, most of the country's problem areas were left dry. The forecast doesn't offer much relief for the next 5 days. This morning's 5 to 10 day Euro model, however, offers better rain chances.
There were some forecasts that had indicated rains returning like Saturday, and they kind of flip-flop back and forth late last week. The map on my screen is from our friends at Marcus Weather, and this is total precip from January 16th through the 20th. It's an estimation, but you can see southern Brazil, which is like toward the upper right part of this screen, didn't really catch much of anything. Most of Argentina didn't catch much. There were some pockets that caught a couple inches of rain, but this is seen as being very disappointing. You look at the last 30 days, and you can see where the problem areas are. It's very clear. Southern Brazil and then a lot of Argentina have seen like a quarter of their normal rainfall over the last 30 days. Looking at the forecast, your problem areas are still, with the exception of southern Brazil, which looks better the next 5 days. But the Euro model this morning suggests that a lot of Argentina will still stay dry through the next 5 days. And then you may see some rain return during the 5 to 10 day period. So they kind of keep kicking the rains back. And there are still some key soybean areas, even through that 5 to 10 day, in that 5 to 10 day period, that are going to be dry based on this morning's forecast. So I think that this weather deal, the lack of rains over the weekend, and then the forecast, which doesn't really look super great for Argentina in particular, this is probably a big part of the reason why the markets are higher this morning. Let's go to Brazil.
So, the Brazilian soybean harvest is the slowest in 4 years. According to well followed private group Ag Rural, only 1.7% of Brazil's soybeans had been harvested as of last Thursday, marking the slowest pace for this time of the year since 2021. During the same week last year, 6% of the crop was harvested. Excessive rainfall has impacted harvest, particularly in Mato Grosso, where progress is the slowest since records began in the 2010-2011 season. Ag Rural also reported that unfavorable weather conditions are hindering the planting of Brazil's second corn crop. As of last Thursday, 0.3% of the crop had been planted, down from 4.9% at the same time last year, and the slowest pace since 2021.
I don't see, this is the same map I had for the last story, but I don't see the excessive rainfall here. So Mato Grosso had 104% of its normal rainfall over the last 30 days, yet they're indicating that excessive rains are slowing harvest. I wonder if this has more to do with the fact that some of the crop was just planted late. They started off planting late and then they caught up very quickly. I wonder if the same will be said for soybean harvest. As it relates to that second corn crop, we kind of thought that given the later soybean planting, that maybe the corn planting the second corn crop is the big export crop. It follows the soybean crop. We thought that maybe that could be an issue. So this is probably another kind of friendly input here this morning when you talk about corn in particular, if there's a little bit of concern about that second crop. Rainfall over the next 14 days, what's expected. Mato Grosso is going to be 84% normal, and that's where your early harvest is up north. And then you go further south, I suppose I could see a problem. Mato Grosso do Sul, San Paulo, Paraná, 140% ballpark of normal rainfall expected over the next 14 days. So I could see some issues in those areas, but further north where soybean harvest is now begun, I just don't know that I see the issue, but that's what they're reporting. And that's, again, probably part of the reason that the markets are up here to start the week.
President Donald Trump has decided to delay the immediate implementation of tariffs. Instead, he is asking government agencies to review trade policies and economic partnerships with China, Canada, and Mexico. Trump will instruct federal agencies to address U.S. trade deficits as well as other countries' unfair trade practices and currency policies. The main focus will be on ensuring compliance with the terms of the United States-Mexico-Canada Agreement, also known as USMCA, and the Phase 1 trade deal with China. After reviewing trade policy, federal agencies will make recommendations to Trump. Trump's cautious approach to tariffs is a relief to many who expected immediate implementation.
I don't think this has much to do with the markets being up this morning, but it probably doesn't hurt. Trump did come out late yesterday and said he's thinking of 25% across the board tariffs on imports from Mexico and Canada beginning on February 1st. He's thinking about it. This stuff's moving very quickly. We're not going to get into all the executive orders that he signed yesterday, but there's a lot of things that have happened and could happen very, very quickly. So I think we are at the very beginning or infancy of a news cycle that's going to be quick and fast and furious, and things are going to change very fast. So for the moment, no, the market doesn't appear concerned about tariffs. We mentioned last week Scott Bessent had his Treasury confirmation hearing, and he mentioned China, and he said he's going to push China for more ag purchases because they didn't complete their piece of the phase one trade deal from back in 2020. So I think there was actually some optimism with regard to tariffs on that front, but I think there's still a million different ways that this could go. Remains to be seen.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of last week's premium videos?
So we had some updated guidance regarding, carbon scoring and 45Z and GREET and that sort of stuff last week. Pete Meyer was on and we did an explainer. We answered mailbag questions that came in from subscribers. What does a farmer need to do? What does a farmer need to think about with regard to this stuff? Do you need to start tracking all of your farming practices so that your corn qualifies as low carbon corn or your soybeans qualify as low carbon soybeans? You're going to have to do it eventually. Do you have to do it right now? That's a question mark. This is an interesting topic. It opens a number of questions. I know farmers are skeptical about all of this, that they're going to get paid more for their corn because it's low carbon. And I'm skeptical of it too, because who's going to get the tax credit associated with this? It's the producer of sustainable aviation fuel, essentially. And you're betting that that credit is going to trickle down to you. It's going to trickle down to the ethanol plant and then to you as the farmer eventually. And I understand that that's comes with a degree of skepticism, and I would be skeptical also. Jim was on. Pete was on Thursday. Jim was on Friday. We talked about the tariff situation and how the narrative, the script has flipped just a little bit, especially as it relates to that Scott Bessent hearing and a number of other things. We talked about interest rates, stock market, economy. We're going to have a lot to talk about on Macro Friday for a while, I believe, with these policy changes. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. We do new videos every single business day. Our morning email goes out at 5 a.m. Central Time. It includes all of my cash grain marketing recommendations. Give that deal a shot. It takes about 30 seconds to sign up. I will forward you a copy of this morning's email if you sign up this morning.
The funds substantially increased their net long position in the corn and soybean market last week. CFTC released weekly commitment of traders data on Friday. During the week ending Tuesday, January 14th, large money managers were net buyers of 48,000 corn contracts. The net long of 292,000 contracts is the largest since May 2022. Funds were net buyers of 73,000 contracts of soybeans. The funds have a net long position in the soybean market for the first time since December 2023, with 58,000 contracts representing the largest net long position since November 2023. And finally, the funds were net sellers of 5,000 contracts of SRW wheat on the week.
If you guys are watching on YouTube, we have a typo in our graphic here. Funds are long, soybeans, not short. In any case, this is super interesting. The narrative has shifted, and the attitudes and sentiment among large money managers has shifted and shifted drastically. I mean, look at this fund position in the corn market. Net long 292,000 contracts as of January 14th, whereas the funds were record short 356,000 contracts of corn just in July, so 7 months ago. The all-time record net long position for reference, I believe, was in 2011, and I believe it was 409,000 contracts. So with the fund net long, supposedly, according to the private groups, at 320,000 contracts in real time, you're like 2 heavy weeks of buying away from a record fund long in corn, which is absolutely phenomenal. I think the soybean situation with regard to large money managers is just as interesting, maybe even more interesting. Corn's got a story here. I mean, the U.S. situation in particular has tightened up drastically. Back in September, USDA told us that U.S. ending stocks as of August 31st this year would be, 2 billion bushels and change. And now we're down to 1.5 billion bushels and change as a result of better demand and also a reduction to the size of last year's crop. So ending stocks, U.S. corn dropped like 25% over the course of just 4 months, if you're to believe the USDA data. Soybean ending stocks have dropped as well, but you've still got this tremendously burdensome global soybean situation. And maybe that's in question now because of some of these South American weather issues. I think that may be taking too many steps forward. Wheat just can't get out of its own way. I think it's kind of like the short leg of the fund spread here, and it's been really disappointing that wheat's been unable to rally despite the strength in the row crop markets.
U.S. soybean exports to China declined in 2024, while Brazilian shipments increased. Last year, the U.S. exported 22.1 million metric tons of soybeans to China, a decline of 5.7% compared to 2023. Despite the decline, U.S. soybean shipments to China have surged in recent months as traders prepared for a potential trade war between the two countries. Meanwhile, Brazilian soybean exports to China rose by 6.7% in 2024, reaching 74.7 million metric tons. Argentine soybean exports to China also increased last year, more than doubling to 4.1 million metric tons. Brazil's share of the Chinese soybean market increased to 71% last year, while the United States' dropped to 21%.
This should be no surprise. We know that we're exporting less and that Brazil is growing and exporting more. Our hope here is that, this crush number continues to increase. We're going to crush a record amount of soybeans this year in the United States. USDA has told us as much. But if the trends continue, the export number may continue to weaken. So we have to hope that all of this biofuel stuff works out and that even despite a weaker export program, we're able to maintain an adequate kind of supply and demand balance here in the United States. So that's been the trend. I don't think that should be any surprise that, the US is exporting less and that South America is kind of taking over that business to some extent, of course.
Bitcoin climbed to a new all-time high on Monday before pulling back. The cryptocurrency surged past $109,000 early on Monday ahead of the presidential inauguration. The rise was due to expectations that President Donald Trump's administration will create a favorable environment with pro-crypto regulations. Crypto enthusiasts are optimistic that Trump will establish a crypto advisory council and create a national Bitcoin reserve. Over the weekend, Donald Trump and First Lady Melania Trump launched meme coins, and by Monday morning, Trump's coin had surged to a market capitalization exceeding $10 billion, while Melania's surpassed the $1 billion mark.
All right, this meme coin thing, the Trump coin, is interesting and noteworthy, and I'm going to talk about it for a second. I like a lot of Trump's policies. I do. I don't like this at all. It feels scammy to me. So they call it a meme coin. That's what Trump calls it. The definition of a meme coin is essentially a cryptocurrency with little to no value, authenticity, utility. And they say that on their website. According to its official website, Trump, the coin, is marketed as a digital collectible and a means for supporters to express their enthusiasm. The site includes a disclaimer stating that the coin is not intended to be or the subject of an investment opportunity or security and is not political and has nothing to do with any political campaign, political office, or government agency. The coin has a total supply of 1 billion, but they only put 200 million on the market. The other 800 million, 80% of what's out there, it's held by Trump affiliate entities, specifically a couple of his companies, CIC Digital and Fight LLC. I don't know. So they tell you what it is. I mean, they basically tell you, hey, this is just it's a collectible. It's like buying like a coffee cup with Trump's picture on it, but it's not supposed to be an investment. I feel like it's going to be taken out of context by some people, and it could go to $1 million. There's too much money out there. I get it, but I feel like it's a conflict of interest and maybe kind of a bad look in general. I don't know. That's my thought. If you guys think differently, drop me some YouTube comments. I'm sure some of you guys will hate it, but whatever. What did cattle do last week?
Cattle futures were mostly lower on Friday. Live cattle were 40 cents lower to 22 cents higher. Feeders were 50 cents lower to 32 cents higher. Cash cattle trade was light last week, although we did see higher trade. In the Southern Plains, cattle were $1 higher compared to the previous week at 201. Up here in Nebraska, trade was unevenly steady at 203 to 205. And then over in the Western Corn Belt, cattle were $1 to $3 higher at 203 to 206. Box beef was higher on Friday. Choice was 28 cents higher at 333.69. Select was 45 cents higher at 319.83.
US dollar lower to sharply lower this morning. Stocks are up a little bit. The S&P's up 22, the Dow's up 160. Bonds up a little bit. Gold's down $18. Crude oil is down $2 in the March WTI at 75.38 last trade. Have a great day, guys. We'll be back on Wednesday.